Hey traders, hope you all having an awesome weekend. So this weekend's video is going to be much more technical as compared to my previous video. As you might have not seen me much using these patterns as you can see in front of your screens, and this is what I found here on natural gas, and this is what we're going to talk about in today's video, in today's analysis part of the video. And that is why the analysis part of natural gas is going to be a bit more longer, because I'm going to explain you how this pattern has been formed and how to trade this pattern using the exact stops and target rules. So in the first part, I'm not going to make it much longer as usual. Like I said, the second part is going to be a bit more informative and bit more technical. That is why I don't want to confuse you a lot by showing lots of trades. But we do have some nice trades last week. Some zones played out nicely, especially indices that played out really nicely. So I'm going to go through indices very quickly, super quickly. Few trades which we took, including losing trades as well, and also zones from where the price has reacted. Just one zone played out for Forex. Otherwise, we're still waiting for the zones to play it out, hopefully by next week for Forex and commodities both. For indices, I'm going to send a new zones hopefully by tonight. First, let's look at NASDAQ 100, the zone I've been sending to the members from last few months. But last week, I found that the price is now approached to the level of trend continuation zone bullish area, from where we were looking for possible trades, but with entry conditions only and on a smaller time frame. Now, if you follow me, you know the least I go in a time frame is 1 hour time frame, and mainly I look for double tops and double bottoms if I want to go on the 1 hour time frame. But you can also look for engulfers, aggressive entries on 1 hour time frame. The reason is that I've not tested much on 1 hour time frame. But looking at that, if you see here, if you are my MMTA course student, number one, I want to show you a double bottom that has been formed, which is right here. Price was trending lower. We have a pullback, pull up, and a little double bottom with a 382 Fibonacci candle, and that is itself your entry. If you have entered it, that is also cool. But for me, I've taken this trade on 1 hour time frame right here. Clear double bottom on 1 hour time frame. You know what sort of double bottom is that on 1 hour and on 4 hour as well. If you're learning my course, you know all the rules for that. But if you follow me here on YouTube, you know that is a valid double bottom pattern. Rejection once, pull up, rejection twice, bullish candle, and price pushed up and nicely hit 1.421 take profit here on NASDAQ. So let's look at the next one. Australia 200. Sorry for the typo right here. It's not AUD, it's Australia. So it's AUS, which is right here. And as you can see, back on 4 hour time frame. Now, if you look here, zones were sent to the members on 21st last week, and we were waiting for the price to form some sort of condition. The price was inside the zone, and all we were waiting for a valid condition. And what are the valid conditions? Now, if you follow me, you know the main 4 factors we look at. We observe the market, right? We look for the conditions. Once the conditions are met, observations are done, then we look for our entries. Once we take our entries, we place our trades and targets, and that is how we need to be trading. Now, the price was inside the zone. Our observation is done. Then we have a price from the bullish engulfer. Our conditions are done. Then we entered our trade right here, our third factor. And what is the ATR? ATR is 40. And right here, if you look here, just one ATR has been hit nicely. It pushed more than one ATR, easily 1.3 to 1 from here if you would have entered right here. But if you are not an aggressive trader, if you have entered at a double bottom, that is also fine. And if you look at 1 hour time frame, nice bullish engulfer that pushed the price massively as well. So that is how we look for the condition, and then we set our targets, and all 4 factors are completed, and that is how we entered this trade without any confusions. Maximum if it would have hit your stop loss, and then you look for next conditions. So these are the 2 I've sent to the members. I've sent 1 more, but we are still waiting for the price to reach to the zone for our possible trades. But these 2 played out nicely from the zones I've sent to the members. Then we have EUR USD, and as you can see, we were waiting for the price to hit the zone and form some sort of signal within the zone. And what do we have after that? Price formed, pullback, formed a bearish engulfer, and now it is pushing lower, and it still did not hit my targets. Let's see how it goes. It might form double top as well. That's totally up to you. If you have entered aggressively, that is totally fine. If you have entered here, totally fine. I've kept my stop loss above the zone for the price to keep it some room. So that is what we were looking at, a pullback in the zone, and let's see how it goes. And that is how we need to be trading with exact rules. Now I'm going to show you the trades that played out and that did not play out, and the entry conditions we had in the market. Starting with CHF JPY. The trade alert was sent to the members, and that was a heartbreaker because I've used the smaller target. I not mainly use 2 targets, but looking at the trend, I decide to use a smaller target. If you are my student, in the pullback entry section, I've used a smaller target. But if you would have used the targets from the strategy room, then the bigger target would have been played out nicely, and that would have been your winning trade. So for me, it was a losing trade because I've used a smaller target here, but that is totally fine, a part of trading. Then I've sent USD CAD right here. This trade was sent to the members right here, and that was one of the winning trade, a nice pullback entry, and we have sent the zones to my members in previous reports, and price played out nicely from this zone, pulled back down, broke below, retest the anchor level, formed a bearish signal below 50 EMA. All the rules are checked, and that is how we take our trade below 50 EMA and nicely hit our take profit here. Then this trade, I'm not sure if that hit your stop loss or not, but I've used a bigger target here, right here, not a usual one, but a little bit bigger target. So that might have hit your stop loss if you have used a smaller target. So let's not count it as a winning trade. Let's count it as a losing trade. But if you have someone use the same target and if your stop loss is not hit, do let me know in the email if your stop loss is hit or not. But if yes, if your stop loss is hit, you know what is your second chance entry. And that could be a good example of that. And it might have hit your stop loss with a spread, depends on your broker. So right here, but I want to show you a few more trades quickly. Right here, GBP AUD, nice pullback entry. Price broke below. We had a pullback. We had a bearish engulfer below 50 EMA at the level of resistance, area of value, and extra confluence at the area of value. Everything is checked. Why not entering this trade? That hit your take profit as well. That was not sent as a trade alert. Like I said, look for the condition, ask me questions. That is why you have a priority group where you see reports, where you see trade alerts. Looking at the description, you can always ask me a question. Then we have AUD CAD right here. Took this trade, not sent in the group, right here. Nice pullback entry. We are above 50 EMA. We had a EMA cross, and I've already made a video how to trade EMA cross in my playlist. Feel free to check that out. That pushed up and nicely hit a take profit. A small trade, but hit your take profit using 1-to-1 targets. So these are the trades that happened last week. Was a good week, and few zones I'm still waiting for Forex and commodities to reach to the level for the possible trades. So let's wrap the first part of the video, and my goal is to show you this trade every week so that you can see the potential in trading using the exact rules, using your strategy without changing your strategies, without doing revenge trading. I show you losses as well because losses are part of your trading, and I've shown you last week we had a winning streak from last whole month, 1.5 months we had a winning streak, and this week we had let's say 1 or 2 losing trade in the priority group. That is what we need to understand. We are not going to increase the risk, instead decrease the risk, stay under your risk so that your ROI will not affect. So always follow your rules and always stay under your risk capital. I hope you got a value, and I hope you have learned something out of the first part of the video, how we took counter trades, how we took trending trade. If you are above 50 EMA, how we taken entries. If you're below 50 EMA, how we taken entries. So that is how we need to analyze the market with the rules. So let's wrap the first part and let's jump on to the second part, which is our analysis part. And I'm going to do analysis of natural gas, gold, silver, crude oil, starting with natural gas. And like I said, it's going to be a bit more technical this week as I found this pattern. Now, this pattern, I call it an advance pattern. You can also call it a butterfly, a bullish bat, but I call it an advanced pattern, and I have 2 ways of taking trades using these patterns. One is this type, a bullish pattern, and one is another type, which is something like this. But let's use this one as we have found this pattern here on natural gas. Now, a heads up for my student in MMTA course. I'll be uploading full chapter, not a lesson, full chapter just based on how to identify this pattern and how to use exact rules of creating this pattern without using any sort of indicator. And I'll be uploading that very soon so that you guys look at the charts like a pro. I used to trade a lot with this pattern when I used to day trade on smaller time frame because this pattern worked nicely on smaller time frames as well. So I'll be uploading that in your MMTA course in the advanced section very soon. Keep an eye and I'll keep you informed as well. So starting here with this pattern. Now this advanced pattern is a combination of Fibonacci retracement and Fibonacci extensions. And the way it forms with some sort of rejection out of retracements and extensions. So for the pattern to be valid, like I said, I have some certain rules that need to be met, and if those rules are met, then I take my trades. Now, For me, very simple. If you have heard about this pattern, ABCD pattern, for me, I use a Fibonacci retracement. So the way I use my Fibonacci retracement is from my X right here, not my X actually, from the letter X from here till the point A, something like this. Now, when I see an impulsive move from X to A, I want to see a pullback to at least 382 retracement, which is like this. Now, like I said, I have some rules where this pattern gets invalid. Let's say we have a price which has gone down like this. In that case, my rules become invalid. And why is that? Like I said, I'll be uploading full chapter for my students, and it is impossible to teach you in a single video. But in a nutshell, to show you in a single video, that is what I was looking at. And if you look here on Owanda, that pattern is not valid. But here on capital.com, that is absolutely valid. Now, if I go back in a replay mode, something like this. Let's do something like this. Now, first I want to see an impulsive move from X to A. Then I want to see a pullback from A to B, and that must be at 382 retracement at least, right? If the pullback is impulsive and gone down to 786, in that case, that makes my pattern invalid. So I want to see a pullback that will not push down to 786 retracement. And I want to show you that in a replay mode. So let's see how it goes. So we have a pullback right here. So price has now formed my A to B pattern right here. Now I want to see an impulsive move up for my formation of pattern C. And how do I do that? Here comes a tricky part. In order for me, for a valid C, I want to use my Fibonacci extensions. And the way I use it, it is something like this. My Fibonacci extension, which is from a point X to point A, and then back to my point X, which is right here. Now, as you can see, we have an extension which is right here. Now, I want to see this pullback to hit my extension area. Again, please do not start trading this on the live market. I have very detailed rules for that. Because you guys follow me and we have a valid pattern, that is why I want to show you so that it will make some sense to you. Now, for a valid C, I want to see a pullback to my extension level at least till 1.272. And let's see if we get that. Right here. So price has formed and hit a level which is point C. And now we are looking for a final leg which is point D. And how do we get point D? For that, I'm going to pull up my Fibonacci tool again from point X to point C right here. And as you can see, D is aligning with what? With 786 retracement. So let's see where the market has pulled down to. Right here, we are at the current date and the current time of the natural gas chart. And right here, that is now, I'm expecting a completion of point D and completion of this bullish pattern. Right here, once the price pulled down to point D, which is over 786 retracement, that is an area where I want to enter this trade. I want to enter natural gas using a limit order right here. I'll keep my stop loss below the X of this pattern. Take profit. I can take it up 382 retracement, something like this, and have some stops and target rules which I can't explain in this video, but just a generalization. I'll keep my stop loss somewhere below the X, and that is what now I'm expecting from natural gas. And as you can see, the Fibonacci extension has followed all my rules from point X to A, then point A to B. Then our Fibonacci extension right here has rejected from 1.278 extension level and rejection exactly from here. Then the price is now pushing down to point D. So that is what I want to show you, and I hope you have learned something out of that. And that is what now we need to look at here on natural gas. Now, what we can expect now, if that happens, if the price push down, we have a likely chance the price will push down to 786 retracement, from where we can get some good push up at least till 3.82 retracement, and that will be our take profit as well. So that is what I'm expecting from natural gas, looking at this pattern. And right here, if you see with our extension level, how nicely this pattern has formed. If you look here from point X to point A to point B, right? Point B to point C, and then we are heading towards point D. That is how this pattern will complete, from where we're going to look for our entry. So that is what I'm looking at in regards with pattern. Technically, that was quite a technical video. I hope I did not confuse you much, but if I did, please feel free to rewind and rewatch this video. So this pattern is formed here. Let's look at our zones. Now, the first thing I'll be looking at my entries at point D, which I've already mentioned, but we also have this little anchor level right here on capital.com, which is 1.714 that goes up to 1.742. Now, you see how nicely it aligns with point D, and that is also our level of support from where we can expect possible bounce. And then we have a major support, which is right here 1.573 that goes up to 1.676, from where if we have a dramatic push down, a zone from where we can get a very good bounce and a possible reversal. We are still in an uptrend. As you can see, we have 1 and 2 and 3 touches, and let's say the price won't form a point D. We still have a chance that price will push up from here, looking at this nice trend. But if broken below, then we are looking at point D and this area for our possible trades. Now, let's talk about bearish conditions at this point. As now we are below 50 EMA, right, and 20 EMA as well. I want to see a break below this trend line and then a possible pullback. Must be below 50 EMA, and with that pullback I want to see a bearish engulfing pattern. Once we have that, we are good to go short to take our next sell trade till we are here or till we are at point D or in this zone, wherever we get an entry conditions. So that is what I'm looking at in regards with bearish trade. As now we are below 50 EMA, if broken below, then with a pullback, and if we get a valid condition, valid sell condition, in that case we're going to go short. Otherwise, price reacted nicely from the area of value, even though we had no conditions, but it did push down from the area of value. Now here in Oanda, it is not a valid pattern. That is why I won't be looking at my advanced patterns here on this platform. That is why I just remove this and just keep it very simple. But if I get a condition on capital.com, if a price reaches point D, I'm going to take my trades from there. But here, price is pushing lower, not a valid entry if you're wondering. But I'll be only looking at a pullback below 50 EMA with a bearish engulfer. If I have a valid pullback entry, I'm going to go short till we are where? Till we are in the zone below, which is 1.476 that goes up to 1.645, or a rejection zone 1.583 that goes up to 1.598, from where we can expect a very good bounce out of. Other than that, I'm not looking for any other condition, just a pullback entry bearish on this platform. Or if we are broken above, in that case I start to look for my pullback entry bullish till we are in the zone above for our counter trend trade. So these are the conditions now I'll be looking at for natural gas if you are trading on this platform. Now here on NEMEX, yes, we had a valid pattern. Now price opened above in gap adjustment in contracts and opened above, now aligned with the other platforms, as well as this platform was behind the other platform due to the rollover. We are now in the zone and price is now falling down from the zone. That was also mentioned in my report. Now here, exactly the same, point D is an area if we have a pullback to, and that also align with the level of support. If we have this much big pullback, only then I'll start to look for my advanced pattern trade. Otherwise, we are way above point D, but here we can get a possible and a big pullback above 50 EMA. We have a cross right here, a bullish cross, and if we have a bullish engulfer above 50 EMA, and if we have that, in that case I'm going to go long using 1 to 2 ATR for my target. So very simple, above 50 EMA, just look for the pullback. If that pullbacks continue, that can be also a point where we hit a point D on capital.com, and we will be on the same track on all three platforms. So here on this platform, keep it very simple, with a pullback above 50 EMA with a bullish engulfer, pullback entry bullish only here on this platform. Otherwise, no condition on Oanda, so I won't be looking at Oanda charts unless I see a better clear condition. So that is what I'm looking at here on this platform. We have a valid advanced pattern here as well, but if we have a pullback entry above 50 EMA, that is where I want to enter my trade. So keep an eye, these are the conditions now I'll be looking at for natural gas trade. Let's now look at gold. Right here on gold, as mentioned a few days ago, that I won't be looking for any trades and we have no conditions for gold. Now at this point, I'm still not taking any trade unless and until I see a clear break above this high, this wick. Once we are broken above this high, only then I start to look for my pullback entries bullish. Now we are still in between the EMAs. We are not above or not below completely. That is why I want to see a clear break above this high or clear break below this low for my next pullback entry bearish. So pullback entry bullish will be above this high. If you are broken, bearish trade will be only if you are broken below this low. Otherwise, I'm staying back until we are broken above or broken below for our sell or buy trade above this high. So we are still bullish here for gold. On a long term, as you can see, price formed a bullish candle right here above 50 EMA, but we can still get a very deep pullback to 50 EMA. That is why I have these anchor levels on 4-hour time frame. If we are broken below this low, then we have a very good chance the price will hit this anchor level and keep on pushing lower. So again, bullish trade will be only once we are completely above this high with the momentum, then a pullback, followed by pullback entry, followed by bullish engulfing patterns. Next above, we have silver. Now, we had a nice bearish candle, right here, bearish engulfer has been formed. That would be an entry as well. That would be an entry as well. But this entry played out nicely. If you look here, ATR is 29 cents. Right here, that would have hit your 29 cents take profit here. But I'm still expecting a price to push lower, at least till this recent lows, and towards the level of major support of a trend continuation zone, which is right here. So an area from where I want to look for a nice bounce, which is 25.57. That goes to 26.34, from where I want to see a nice bullish engulfers or double bottom entry conditions. Still expecting a price to push lower in this zone to take my next buy trade. Otherwise, I'm not taking any buy trades unless we are completely broken above this high with the complete momentum, followed by pullback, followed by bullish engulfing pattern. So that is what I'll be looking at for my next trades here on silver. Next up, we have crude oil. Now, if you have remembered, I've said that if we are broken above with the momentum, that we have a likely chance the price will push up. Symmetrical triangle here has been formed. We are waiting to see how it closes. If broke above with a strong green candle, then a likely chance the price will push up and shoot up from here. And now we are broken above. At this point, that can be your aggressive entry right here. But we do have this level of little anchor and resistance. But looking at the break above this symmetrical triangle pattern, we might get a nice retest of this pattern again before the price will push up from here. And if we have a signal like bullish engulfer here, in that case, that would be a very strong entry and price will likely push up. So let's see if the price forms a bullish engulfer. If yes, then we have a valid buy signal and price will push up. Otherwise, this break itself is an entry and a very aggressive entry, and expecting a price to now push up from here at least 2 ATR, 1 to 2 ATR easily, and then we start to look for a pullback entry bullish. So keep an eye, these are conditions now I'll be looking at for crude oil. So that's it for commodities, guys. Hope you got a value in today's video. If yes, hit a like button for me. It really helps me in a YouTube algorithm. Hope you trade green rest of the week. See you guys in the next video. Till then, take care.